Hello everyone. I think I got a lot of responses to the last video I made on basics of stock investing, and I think few of the questions were from people who don't understand really how to read stock information. So I thought maybe I should take one step back and take you through some of the basics so that you understand how to read stock information before going into investing in stocks. So this is for someone who's totally uninitiated in the stock markets, and I'll try to cover these basic terms that you can see on your screen. And again, like last time, my approach will be to talk practical and how to see where you find these terms online, and what are the meanings of these terms. So this will be very basic. However, to jump into other things like fundamental analysis or technical analysis or how to find good stocks to buy, you need to first understand what are the various terminologies used. So once we have a hang of the terminologies used, we can step into the world of investing with more confidence, and we can also see a lot of techniques on how to select stocks, which is going to be an interesting topic. A lot of people have asked me to make videos on how to select stocks, so maybe I'll cover that in the future videos. But right now I'm trying to cover the very basics for people who don't understand these terms. So if you know these terms, then this video will be of little use to you. However, if you don't, then please stay here, watch till the end, and I'll maybe show towards the end how to calculate some of the multiples mentioned in these terms as well. So that will help some people who don't know multiples but may know these terms. So let's begin. Now, these are common terms used for any stock. So days high low, 52-week high low, these are very self-explanatory terms. Like a day's high low is the highest or the lowest price in the day for a particular stock. 52-week high low would be the high and low of the stock over the last 52 weeks, which is 1 year. L/Q price band is lower upper price band. So the exchanges restrict movement, a highly volatile movement of stocks. Beyond a particular level, the stock is not able to rise in a day. So some price bands are 5%, 10%, above which the circuit happens and the price is not able to go beyond that level. So these are those price bands. Then VWAP, which is the volume weighted average price. So some trading happened, some 10 amount of stocks got traded at X price, 20 got traded at Y price. So what is the volume weighted average stock price for the day? Beta is the sensitivity of the stock, where how it moves along with the markets. Deliverables is the percentage of deliveries that a particular stock sees on a day-to-day basis. So if a stock is getting delivered by a large percentage, it means that people are less doing day trading in that stock and more doing long-term investing. They're taking it in their demat. Basically, they're taking the delivery of the stock and not just buying and selling in the same day. So a high amount of delivery means the stock is considered good from a long-term perspective by most of the investors. Then there are things which are used in technical analysis like simple moving average, which is just an average of the stock price over a particular period of time. Then you have market capitalization, multiples, book value, dividends, EPS, face value. So we'll see all this. Let's go to money control and type in any one stock. So yeah, I have already typed in Hindustan Unilever. So let's type in something else. Let's say Nestle. Okay, Nestle India. So this entire thing pops up, and the purposes of the video is to make someone understand this whole block if they don't already understand it. So as you can see, we have previous close, which is the price at which the stock would have closed last time the market stopped or closed, which is yesterday 3:30. Open price is what it opened at today after the bulk trading hours in the market. So this is the early morning price, the first price that the, the stock opened to. This is the live price, right? And right now, as you can see, It shows today's high and low, which is between 17,231 to 18,301. So today the stock moved between these two prices. It went as high as 18,301 and it closed at 80. Since I'm not viewing the screen during a market hour, this closed at 17,322. So here towards the low than towards the day's high. 52 weeks high low is, as you can understand, in this year the highest point the stock has reached is 18301, which is also the high reached today. So you can see that today we have touched the 52-week high, and the low in the last 52 weeks is around 10,126. These are the price bands according to where the stock is today, and that's where the circuits will happen in case the price goes beyond these levels. So this is the BSC screen and this is the NSC screen, and I'm using money control website. The volume is mentioned here. As you can see, volume is always higher on the NSC being a larger exchange. Now VWAP is the weighted this is volume weighted average price. So some stock would have got sold at 17,000, some would have got sold at 18,000. However, and there would be different volumes. Volume means the number of stocks traded at that price. However, if you average by volume, this is the average price for the day. Beta is a concept where you see a stock sensitivity to the overall market. So if it's positive, it generally means the stock moves in the direction of the market, which means the market is rising, it rises, market is falling, it falls, and the higher this is, the more is the sensitivity. So if it's closer to 1, it will move in tandem with the market. If it's positive, it is moving in the same direction as the market. Negative, it is moving opposite to the direction of the market. So that's the sign of beta. But in terms of magnitude, if it is a high number, then it moves faster than the market. So if it's more than 1, it will move faster than the market in the direction of the market. If it's less than -1, it moves opposite to the direction of the market, but at a speed or at a pace faster than the market. So market falls 10%, it may fall 20% if it's the beta is below -1. And similarly, on the positive side, deliverables is the quantity, the percentage of the orders which are being delivered over the last 5 days, 3 days. So if you see 8 days, 37.11% of the stocks bought of Nestle India are getting delivered. So a large portion, more than one third portion of the total volume traded is being done for long-term value creation and not for intraday trading. So which means investors are serious about this stock from a long-term perspective and not just doing buy and sell on the same day. Simple moving average, this is a 30-day, 50-day, 150-day, 200-day. This is a very important concept in technical analysis. Maybe I'll cover it in another video. And technical analysis basically relies on historical stock data to see whether the stock is going to increase or decrease in the future. Basically, technical analysis says that history repeats itself. So if it has been moving in a particular way, and if it's above the average, then it goes in a particular trend. If it's below its 200-day average, it goes in a particular trend. But we'll save this for a later, some other time where I'm discussing technical average. Then you have charts. You can see how the stock has gone, and you can see these blobs. There is a L, which means a low has been hit here, low over the period. So if I have chosen 1 year, this L will show me a 1 year low. D means a dividend. It could be an interim dividend or a final dividend, and H means a high of this particular time span. Or an N is means that some news has come, either some results have come. So here it shows me that some September results were declared at this point of time on November the 12th 2019. So I can change the period, and then it will give me high low for that period and various dividends and various times when news have been published on the stock. So this is a basic tool where you can see the chart and you can see all the history from wherever this website allows. So you can see how the stock has gone in the last 20 years through this all tab. Sometimes it's called the max tab as well. Going down, so this is technical analysis. Again, as I said, so we discussed what is a simple moving average. Is basically the average of price over the last 5 days, 10 days, 20 days, 50 days. So as you can see, there is a correlation between this and the current price. Current price is around 17,000, as we saw, 17,322. Technical analysis, which uses the price data to predict future prices, uses SMAs, and similarly we have various series like classical, Fibonacci, Camarilla. These are used to basically predict price in the future using technical analysis. More on this later. I'll cover this in detail in some other video where we are just discussing technical analysis. Okay, this is very important and you should understand this because this is the very basic of what this whole stock page is trying to convey. Now market cap is 167012 crores, which means 1,67,000 crores worth of shares are outstanding in the market, which are bought by various individuals, institutions. So this is reflective of the size of the equity of the company and as per the current price. So this fluctuates as the price goes up and down. So number of shares outstanding into the price is basically market cap. So this will go up or down depending on the price. This is a ratio, price to earnings. I will discuss multiples like price to P by E in detail in this video towards the end. So I think you should stay put in case you don't know about various ratios and how they are calculated and what's their meaning. I will be discussing them towards the end of this video. Book value is basically the value of the equity on the balance sheet, and this is I think per share, so this is 200 rupees per share. Dividend percentage is basically how much percentage of face value does the company give back to the shareholders. So this is 3420%, which means 34.2 times the face value, and the face value is given here as 10 rupees. Okay, so 34.2 into 10, 340 rupees roughly is the dividend given out by this company every year. EPS is basically earnings per share, so this will be all the earnings, which is profit after tax divided by the number of shares. So every share, what is the earning earned, and market lot means how many shares you need to buy at one go. So it is one, so you can go as low as buying one stock. If this had been high, like in case of options and all, this is 75 for Nifty options, so you need to buy 75 options together as one lot. Here you can buy one stock and you can't buy a fractional stock. You can buy one stock, two stock, or multiples of one, multiples of the market lot. Industry P by E is where this is the price by earnings of the industry. So as we can see, our P by E 84.81 is higher than the industry. I will go into the detail in just a while when I discuss multiples, so stay put. We'll go into that very soon. P by C is put call ratio. This is also a little higher level concept. We may have to do a video on options to tell you what are put options, call options, and what is the ratio. So basically right now, to understand this is the ratio of puts to calls. So you can see the puts are lesser than the calls. The price to book ratio, this is the price of the share divided by the book value, which we saw here, which is the value of equity per share. These are on the books, not the market cap, which is dependent on the market price. Dividend yield is dividend per the current price. So as we calculated the dividend, and if we divide it by current price, we will get the dividend yield. This is also an important metric to know which stock is giving you good returns on a yearly basis. Sometimes you have a profile of an investor who wants returns every year in form of cash from a stock. So there are various stocks in the market which are high dividend in nature, like Coal India Limited. You have stocks like ONGC which give decent dividend year on year, and there are a lot of profiles, and you invest as per your profile. So there are a lot of profiles which require that recurring cash to come in, and I think dividend yield becomes an important ratio there, where you need constant income from the stock apart from the price appreciation. And deliverables we've already discussed. This is quite high, and for various days it shows how much percentage is getting delivered, and a high deliverable means the people are looking at buying these stocks for from a long term perspective, this stock Nestle India. So coming back, we've seen all these terms now, so I think these are fairly clear. However, I want you to go through with me uh, on the multiples, because I think a lot of multiples were mentioned on that page, and not a lot may be clear on what they mean and how to compute them. So I'll just take you through a little bit on the multiples now, so that I can explain that. But we'll have to take the discussion on how to buy a stock, how to select a stock in a particular industry by analyzing the multiples or the fundamentals in greater detail in some other video. Right now I'll just show you how we can go about calculating multiples of any stock, right? So if you can see the screen, this is just a small Excel. We'll populate it. Now as we saw, there was a price to the Nestle stock, right? So let's say that was 17,000. That's the price per share. Say the sales or the revenue of the stock is about, say, let's take a guess, 10,000 crores. Okay, so 10,000 and then 7 zeros. I hope that I got that right. Excel doesn't like me for putting such a figure, so I'll just make it, say, 10,000 for simplicity. Okay, and then say Nestle, there are only 10 shares in this company, so the sales per share is about 1,000, right? And this is price per share and this is sales per share. So my price to sales is one of the multiples that is calculated, which is coming out to be 17. So mind you, this is the price you pay for 1 rupee of sale. Now there may be a question on who will pay 1 rupee per share or per sale, per value of sale for any company, right? And that's a genuine question, because generally the price to sale ratio is between 1 to 3 for listed stocks. For startups they are like much higher, like 6, 7, 8 times sales. So you are very right in saying that 17x price to sales is a very high multiple, and it's generally a lower range. However, this is just an example. Going back to it, so I should just maybe make it price per share as 1700 and 1.7 as my price to sale. Now this is a multiple of sale, so what is the price I am willing to pay as the stock relative to the sale that the company is making. So higher this is, for every rupee earned or any currency earned of the revenue, I am willing to pay 1.7 times today to buy that stock. Coming to earnings, say I'm taking the same company, 1700 is the price per share, and out of this 10,000 it makes, say, 10% profit. Okay, so this is the profit of 1,000. Number of shares is again 10, right? So my earnings per share is 100. Now my price per share divided by earnings per share is my price to earnings ratio. Now this means that I am willing to shell out 17 rupees for every rupee of profit made by this company. Now that's pretty amazing, because I am trying to say that as a shareholder, if I am making 1 rupee as profit today, I am willing to give this company a value of 17 rupees, right? So this, digest this for now. I will come back to it, in detail when we are discussing market multiples as a topic in itself. Now, are there only few multiples like price to earnings and price to sales? No, there are a lot of multiples. Like you have price to book, which is generally used in cases of financial services companies like banks and BFCs. You have P by E, like we just saw, price to earnings. You have P to S, which is price to sales, which we just saw. Then you have P by FCF, which is free cash flow to the firm. We have a lot of multiples, and all these are used in various different types of analysis and different sector specific companies. We'll look at them when we go into details of multiple analysis, and we take up the topic of multiples analysis in detail. Now these are very well known multiples, but you can also create, and finance is all about creativity. You can also create a lot of multiples for your own analysis. So like if I show you something, like say I'm talking about the same company. However, my operating metric for a Nestle or any FMCG company is the volumes or the SKUs sold. So I say that for this 10,000 or 10,000 revenue, they sold something like a 1500 SKUs, or this is the volume sold, and number of shares is still the same. Or I can do this without the share also, but you can take it with share also. So operating metric per share is 150, and my ratio for price to this operating metric is 11.3. Now this is good that you know now how to calculate a multiple and what a multiple means. Like that's the value you are paying per sale or per profit or per operating metric. Now, but why is it important to know this? Why is it important that we know market multiples? Is because market multiples help us compare companies in a particular sector. Now, a lot of companies do similar business. Like if you have HUL and a Nestle, they are both into FMCG. Of course, the product portfolios will be a little different. One would be heavily focused on, say, consumer products for home insecticides or something. Some other will be focused on food more. Like Godrej is focused a lot on insecticide business, household insecticide business, whereas HUL is more food and has a lot of other focus areas like detergents and other products. So the product portfolio may be a little different. However, more or less they are FMCG companies and they can be compared on the basis of their multiples. So you can know whether a company is priced cheaper or expensive compared to the industry by comparing the multiples of that particular stock with the multiples of the industry. So we'll take care of this concept a lot in detail when we talk about valuations using market multiples in a separate kind of lecture. But right now we just wanted to cover all this so that you understand the meaning of all this before we dig deeper into valuations and how to select stocks, which will be our next topic. I hope you're learning, you are enjoying these sessions, and if you have any doubt, please put them in the comment section. And if you like the videos, then please do press like and subscribe to the channel so that you can get the latest from my side delivered to you as soon as it is uploaded. uh, Thanks a lot for listening. Okay, thanks, bye.